Hello, and welcome to another Thai session. Today, if you listen, what you're going to learn is potentially going to change your life. I can say potentially because knowledge is not power. It's only potential power if you apply what you learn. You can know how to make $1 million, but if you never apply the skill set, you'll never do anything. You could know how to save someone's life, and if you see someone in front of you who needs their life saved and you don't apply what you know, you only add potential power. You didn't apply the knowledge, you didn't save the life, you don't have the power. So, here is just information on how the stock market works. We may even talk a bit about crypto too. So if you have any questions whatsoever, either right now or as you go through this video, drop them in the comments and your question may be answered in a future Thai session episode. Now, this has no particular order in which things will be said. I'm going to share concepts and ideas as I think about them in relation to the stock market, how I pick investments, how you could pick investments, and in general, that it's really not that scary and it's pretty simple when you understand it. This could help you understand it. Now, the fundamentals. You have cash. Cash is nothing more than a tool. I understand that some people might not see it that way, but over the time of us sitting together, going through some Thai sessions and chatting, you will see that money is nothing more than a tool. And if you use the tools you have properly, you can make those tools work for you and return you more money. Or, i.e., in the future, when you don't care about money, the same way I don't care about money, you see it as buying power. The dollars themselves depreciate. It may have cost you $30,000 to get a really nice home before, whereas now the same home cost $100,000, right? That means the dollars themselves are worth less than the assets because the asset is the same. Therefore, you are holding an asset that depreciates. You want the buying power of the ability to get that house. So the concept of having the buying power is nothing more than having the means to do the thing. If you had the means to buy a house 30 years ago, you may have only needed $30,000. Now, the means to buy the house is to have $100,000. You want the buying power of the ability to buy a house regardless. That's what it means. So we can leverage things such as the marketplace, the stock market, because those are companies that, if you understand how the whole thing works, you are putting your dollars right now that depreciate into an investment, of course, and then they're going to work for you. Your dollars are then spent, given to companies. You can think of it as you're lending this company some money because you still have the ability to sell that share, but they get the ability to use the dollars that you gave them. Depending on your type of investment, maybe it's a growth stock, i.e., you are looking for this stock company to grow in the long term. Maybe it's a dividend paying stock, i.e., they are going to pay you distributions, basically income over a period of time, weekly, monthly, annually, quarterly, or yearly. You can find different types of distribution schedules and give companies your money and then receive reoccurring income over time. And that basically reverse engineers a budget. Getting too far ahead of ourselves. But then as you start to understand these things, there are individual stocks and companies you invest in. And then there are funds. Funds are basically a whole bunch of people who do the research for you. And then they will take the money that they've accumulated from people who believe in them and their strategies and their research and wisely invest it into multiple different stocks or bonds or even ETFs or do covered calls. A whole bunch of these are just different ways to invest. Do you want to do the work, or do you want to give someone else the money to do the work? And then based on that, if you gave it to someone else, they have funds for different purposes. Whether you're looking to invest in a sector specifically, there are thematics. Thematics are types of ETF funds that are specific to market disruptors. This right now being your AI, it's new. Your chat GPT like stuff, generative AI, NVIDIA, um, any of that new tech, blockchain technology and cryptocurrency. That's new. Energy sector developments, that type of stuff, right? Disruptor markets that are new and coming. You could invest in these. They're called thematics. There also are income type funds. You could basically buy money. And if you know how many shares you have producing income per week, month, quarter, annually, whatever have you, you could reverse engineer budgets and then basically have reoccurring income and not have to work. They have commodities. You could invest in things like oil and gas and um, gold, silver, precious metals. Um, those are commodities. You could even, on top of that, invest in international stocks, global trade. You could find a fund that specifically focuses on those things. So, depending on you doing just a little bit of research and asking yourself, what do you want to do? How do you want to invest? How do you want to put your dollars to work, right? It's so much smarter than sports betting. Sports betting, someone could literally be running on the football field and the turf was just slightly weird. They twist their ankle. Your whole parlay's messed up. This, you literally know what you're getting. You literally should research, do your due diligence, figure it out what you're going to put your money in, and based on why you did that, you know what you're getting. It's a promise to pay a dividend, a promise to invest in infrastructure of developing that new tech. When the new tech comes out and everyone's spending their dollars on it, you got the growth of that sector, i.e., more buying power. The buying power of that sector today, what if it's $20? You buy shares, ownership of that thing at $20. And a year from now, 2 years from now, it's worth $100. You now have the buying power of still all those shares that you had invested in. However, it's reflected in a new higher price. And you could sell what you just gained, which was $80 on every $20 that you put in there. You gained for every share you had that's equal to $100 now that you bought at 20. You have more buying power in the future. And so that's the concept. I want to put my dollars in things that go up in value, and then in the future, I have more buying power, and that's it. So if you can understand these concepts, again, this is not investment advice. This is educational information based on simple strategies that you can start to research and figure out for yourself. I personally do the method of purchasing income. I buy budgets for myself, a weekly budget, a monthly budget, an annual budget, a quarterly budget as well. Sometimes in there, little bonuses. And then from there, I can build businesses and do other things on those budgets. I can live and sustain my lifestyle on those budgets, reoccurring money that you can plan expenses for. And then therefore, your lifestyle is free based on the budgets that you built. So you could also then create budgets of reoccurring income so then you can invest in the sectors that you really want to see development in, such as there are medicinal companies. If you believed in cannabis companies back in the day, that's a medicinal type fund or stock you could get. You can right now look into, again, not investment advice, but mind medicine, the psilocybin and mushroom medicine, stuff like that, that has a lot of money going into that sector. You could be a piece of that right now and put your money behind that research. And as they find more development on that thing, you were an early adapter. You got crypto. Crypto is a huge space, huge sector, a lot of development in that space. The whole market could become retokenized into being a crypto asset. Every single thing around you, concert tickets could become NFTs. Your wallet and how we pay, places in China, they do QR code pay things. You can pay with a QR code. You can do that same thing right now with crypto. Everything through a crypto wallet is like all of the new internet. Whereas you had Facebook accounts, Meta accounts, YouTube accounts, Google accounts, everything, and you had to keep track of your usernames and passwords. That is Web 2. Web 3, in the world of crypto, all of your usernames, all of your passwords are kept in one wallet ID. The one wallet has a code, and if you know that code, you have access to all the assets. Otherwise, it's encoded, encrypted, and locked. And that's it. These technologies are huge. They're getting developed. Real life integration. You have AI, and then you have augmented reality, metaspaces. You have so much that's being developed around you, and you could put your money to work and get a little piece of the pie before it all blows up. And again, you even can do this as they've blown up, because if you believe in a thing and you're going to continue buying a thing, you buy Apple, you buy your Android phones, maybe Google phones, Microsoft, whatever the heck you want to spend your money on. Why not invest in their corporation before you do so? Look at what their promise is. Are they a dividend stock? Are they a growth company? What do they do? How do they return you your money? And then, instead of just buying the products, invest in them. Keep them afloat while also getting a piece of their returns. So, this is a little bit of a quick synopsis on just like the stock market, how it could work for you, how it's worked for other people. If we get into the world of crypto, it's nothing more than shareholder value, just like a stock. If you imagine a pie, a circular pie, as 100%, and then we say 100% equals $100. We all know $100 is the cap. The cap's $100. So you could have 100 individual dollars. You could have 2 50s. You could have 5 20s. You could have 10 10s. You could have a whole bunch of different ways to divide this up. Now, crypto, let's take that 100% space. Somebody could buy up the whole pie. Cool. They now have ownership of the whole thing. They can sell a piece for whatever they chose to, which then creates a market, because now there's multiple people buying and selling the asset, and therefore it has more value. So as more and more people are buying the thing, the pie itself becomes greater in value. Your portion of that pie becomes greater in value, just like a company on the stock market. If Coca-Cola stock, and you're buying Coca-Cola drinks, doing whatever, Coca-Cola stock earns value as they're making their sales. So your portion of whatever you invested in Coca-Cola went up. As more people buy the Coca-Cola stock, it creates what's called volume. Volume increases the price because that's supply and demand. More people are demanding it, therefore the sellers have to increase their price to make a profit. So they're going to increase how much they're selling it for. A new buyer's buying it at a higher price, and the process continues, making the company more valuable, up. And so because of this concept, the crypto market is the same. It's a pie. It's a percent of ownership. You own a part of this network. The network works because it's literally multiple people, a marketplace of people buying and selling the asset, just like a stock. The difference is these assets that you're buying on the crypto network are actually pieces of code. And then on that, you can program applications and a whole bunch of things on top of it. Now, this is where it gets really complex. Imagine you have the Windows operating system, you have Mac OS, you have Linux, you have Android. All these are different coding languages that your devices operate on. The code itself, you could develop a code for Windows and it doesn't work on Apple. You could develop an Android code and it's not going to work on Microsoft. Or it could potentially if you did extra things and bridged the connection. That concept is all of crypto. A Solana is a code. Based on your understanding of that code, you can develop applications, you can develop tools that people on the Solana blockchain and network can use. The more applications, level 2s, that are built on the main net Solana, level 1, the Solana becomes more valuable because more people are using that because there's multiple applications on it that have value as well. Given all of that, there are programs and companies, given that, what I just explained, how they're all different code, different levels, applications can be built on it as a level 2. Level 1 is the main code, the security, the entire network. There are companies out there like Chainlink, who their primary goal is to make the different codes speak together. So then that way they can understand each other and integrate better. So understand this concept. There's so much potential in the space everywhere you go, whether it be from literal level 1 blockchain level, security, functionality, just ownership of the piece as people develop on it, or the level 2, which is the D app itself. That would be the Facebooks that are built on the internet. That would be your bank account built on the internet, main code, the blockchain. So your main blockchain is just the code. Your D apps that you access through that are creating more value for the main net, but these are level 2s. These have the utility, these are the use case, and it just keeps going on from there. So it's been a little crash course on the stock market, the cryptos, and a little bit of everything. If you have questions, again, feel free to drop them here for a future Tie Session episode. Hope you learned something. There's a whole bunch that we could talk about as well as we continue to go. So see you in the next one. Peace. And make yourself a priority.